Hey YouTube, this is Zach with Achilles Financial. Today I'm going to be covering Raytheon Technologies Corp., which trades on the New York Stock Exchange under the ticker symbol RTX. The platform that I'm going to be utilizing to showcase that information today is TD Ameritrade. And the reason that I chose Raytheon today is because they are significantly off of their pre-pandemic highs. There is a lot of potential catalyst, and they announced earnings this week and had some awesome numbers coming out of that. So one of the things that I want to highlight here with this company is I believe that there's still a lot of potential for later this calendar year, and I'm going to be looking at getting the company or holding the company back to around $100 to $105 per share. While I often talk about covered calls on the channel, and that is a key for any portfolio I am building or looking at, I do not have the capital to go straight in with 100 shares, and so this is going to be one that I'm buying over time. So if you find this type of content helpful, please consider leaving a like and subscribe, as it really helps grow the channel. So let's talk about Raytheon and why I really like the company. So Raytheon is a key provider of U.S. defense systems, particularly in the aerospace side of the house, and in particular hypersonic missiles. So if you look at the chart of where the company has been historically, in this case I will use a 3-year look back period, you can see that the company is rapidly approaching where they were in 2020, north of $90 a share. However, during that time, the big fear, especially with the election last year, is that due to the fact that we were switching parties and we wanted to see a decrease in military spending, there was fears that Raytheon would no longer do as well, considering right at 60% of their total revenue comes directly from Pentagon warfare budgets. So there's a lot of reasons why people were concerned about that. However, due to the fact that the Western world, the United States and their NATO allies, need Raytheon to help to incentivize other countries to not mess with them or to further an agenda, they are going to be required to continue to push out that monetary compensation, and they are continuing to expand into other areas of expertise as well. So what does that look like? Well, they just announced earnings earlier this week, and that was announced on July 27th yesterday, and you can see that they had a positive beat on expectations, nearly 10% higher than the consensus earnings estimate. So the reason why this was such a big deal, or the reason why this was great, is you can see that they have consistently been performing higher. So they met expectations in Q1, but they had 3 consecutive beats before then, and they had another beat today, all the while growing that profitability. So you can see that along here of where they were in 2018 and 2019. So what does that actually look like at the company? Well, first and foremost, I want to highlight the income because they had a very tough last year. So if we look at the annual statements right here, you can see that the company overall did very well in terms of revenue in 2020. However, they were unable to cope with the increased cost associated with some of their deliveries, and for that reason, the stock price fell in accordance with the actual net income. They lost a pretty substantial amount of money last year, with the total net income down here with negative $3.5 billion. So let's take that back around and turn that up and see what is the expectation or the going on for this year. So if we go back down to the net income, you can see that they've now posted 3 quarters in a row of positive profitable quarters, which is excellent. It's what we like to see. But this one in particular was huge, and you can't see the Q2 numbers at this point in time in TD Ameritrade, but it was north of $1 billion in free cash flow or total net income, which is the first time that we've seen that at this point in time. The reason why I'm so bullish on the company is because the CEO, Greg Hayes, said that they expect to have an increase in margin, because if we go into the valuations right here and the profitability side, they're expecting an increase in both the gross and the net margins, and they are expecting free cash flow on an annual basis to be $10 billion by 2025. So recognizing that they just had $1 billion and they've had a couple $100 million over the course of the prior 3 quarters, it's important to note that that means that they are expecting that to at least triple, if not quadruple, during that point in time. And so there is a lot of potential there. Now, as international tensions escalate, I would be unsurprised to see any change in the level of building and buying that we've seen of Patriot missiles, as well as the support that constantly goes in to the F-35. And that is a jet engine that the United States uses. So there is a lot of potential for the stock. There is a lot of growth associated with it. So when we're looking at what does the company anticipate doing going forward, I would just highlight that if we look at their balance sheet, they've got more than $8 billion cash on hand. This is a company that is heavily supported by the US government. It is a key strategic partner. That means that there is basically a duopoly in place at this point in time. Two major companies own the space between Boeing and Raytheon. For that reason, they're not going anywhere. So if you look at this capabilities, they have well in advance enough money to be able to handle any potential issues or concerns. And you can see that again, just kind of going down the list of more than $8 billion cash on hand, and the company continues to do very well. So what am I looking for? What's my approach here? Well, right now the stock currently trades at about $87.20. And they do pay an annualized dividend of $2.04, and you can see that right here, where that annual dividend yield is about 2.31%. What I'm going to look to do is start building in at this level and get and buy in well before it hits $90 a share. At about $90 is when I will stop purchasing the stock, depending on how close I get to 100 shares, because I really do like to sell covered calls on all of my positions. So because I will be buying into this stock, because we will be getting in right at $87 a share, I am very excited about the prospects, because I think that this is going to be a 15% return over the time period that I hold it, because I think by the end of this calendar year or within 6 months of 2022, the stock will be around $100 to $105 a share, at which point I will reevaluate my position. As far as what can the company do, I would highlight that they were not issuing a ton of debt over the course of the last year, but rather they were able to leverage their currently existing revolving line of credit, and for that reason there was a lot of benefits to be able to hold the stock at that point in time. So all of this is what I'm looking at for Raytheon following a very strong earnings report. So if you have any questions, feel free to drop those in the comment section down below. I'll continue to talk about this stock as well as a lot of other ones in the Discord, which is in the description. And if you found this type of content helpful, please consider leaving a like and subscribe, because I cannot tell you enough how much it does benefit the channel. So thanks for watching, and I'll talk to you later. Bye.